And shockingly enough, on this waterfall decline in the gold market, what do we see again? Yet massive volume. Same thing we've seen time and time again for years. But again, you can see that's exactly what happened here. Not once, but twice. Hello there, my friends. Chris Marcus here with you for Arcadia Economics. Today we are live from my silver vault again on such a special day in the gold and silver markets. I know some people are wondering what the heck is he talking about. It was not so special. Gold and silver got pounded, hammered, pummeled, whatever word you want to use. Excuse me. Let us dig in here. See gold down, if you call that 2,000 yesterday. Looks like over $70 at one point, slightly up $8 to start the next day in Far East trading. But again, you saw it's been hovering around the $2,000 mark, dropped below, went over yesterday, and then today didn't go quite as well, down 70. I'd say, again, you know, if you think where we were a year ago and you look at a price of 1940 in the face of what's happening, and don't forget the Fed was meeting today. So where I might add that the Fed said that they're concerned about the economic outlook, hinting at more money printing on the way. That what has been done even so far is not enough. And so at least this chart on the surface of it would suggest that as the Fed is getting, is essentially indicating more monetary easing, their balance sheet already around $7 trillion, that somehow, somewhere on the planet somewhere was just rushing out to say, I have to get rid of my gold right now. And on top of it, as you will see momentarily, just had to hammer it all in one shot. I'll maintain my belief that when I was trading equity options, I would have been, I don't even know if I would have been thrown out of Susquehanna's office. Maybe they would have just dragged me out, beat me up a little bit. If I ever executed something like this, we were trained specifically never to do that. And of course, you know, that's what happens routinely. Here, it was interesting. Silver hanging in there for a while, was not down too much on the day. Usually we see silver down more, but they both took that second leg right around 14 o'clock, which I guess is 2 p.m. Eastern. You see the same thing here. Again, I understand that gold and silver are correlated, but I don't know, is that not exactly the same? And just to see sphere drops at the exact same time, okay, maybe you have the Fed meeting today, I guess would account for that one, or their commentary. Although, as we will dig into today, I'll at least offer my best explanation. Somewhat ironic, because this was happening on the day where the Bank of Nova Scotia has agreed, or has been ordered to pay a $127 million fine for spoofing. False statements. Turned out they lied about things too. And supervision violations, record-setting penalties. And over the last year, we've ushered in a new era of enforcement at the CFTC. I sure hope so. The last era was not particularly promising. I know gold and silver being manipulated. Complete conspiracy theory. By the way, I'm going to have to wrap this one up soon because I'm going to go hunt aliens later and, you know, talk about wild things like, you know, that Kennedy wasn't killed by one lone gunman and his magic bullet. Interestingly, I learned earlier this year that Alan Dulles was actually on the Warren Commission, which for anyone who's studied Alan's career, doesn't seem like the nicest guy around, and we'll leave that one at that and stay on topic. But yes, again, gold and silver contracts, they were penalized before, but multiple statements the company made during the course of that investigation, on which the CFTC predicated its finding and sanctions, were later proven to be false. So keep in mind, we now have precedent, not like we didn't have this before, that you can fine a bank and they can still even be lying, which appears to be the case here with Scotiabank. Now, a question I have, and perhaps if we have any lawyers in the audience tonight, um, you see all this fine money. A lot of it goes back to the CFTC. In this case, I guess it's going to be different in every case. I'm planning to apply for their whistleblower award. I don't know what exactly their criteria is, but at least trying to warn people about what the CFTC seems flummoxed to find on their own. But even aside from that, and probably, which actually I'd rather even see than that, is that some of this money, rather than just going back to the Treasury and then eventually getting used to bail out likely the same banks that are committing the crime, how about some of that money actually goes back to the people that were victimized by this trading, maybe the people who saw unending money printing in 2008 when silver dropped from 21 to 9, while Bart Chilton was confirming JPMorgan making its combined position with Bear Stearns larger, or maybe how it dropped off a cliff in 2011 despite the U.S. making a complete spectacle of the debt ceiling. And so I guess that's why I asked a couple minutes ago, if there are any lawyers who handle this department. If you'd like to email me at chris@arcadiaeconomics.com. Obviously, I am not a lawyer, but fortunately, I have the honor of speaking to people who'd probably like to join that suit. And I've been snooping around, seeing the best I've heard so far is that pretty much everything is on hold until the judge makes a ruling. No word on when that will be yet. I've tried once to get in touch with the law firm that is handling one class action suit that's on hold. So who knows, maybe we will find a way to get our own suit going, or at least I'm going to try and find information as best as I can to at least make it easy so that I know a lot of the people watching right now, I know you've been affected. And we will at least do what we can to hopefully get some of that money back for rather than whatever the Treasury would do with it. Good Lord. Although, well, there's the downside to manipulation. I shared this before. I even got David Morgan. He couldn't believe it when he called me that night when he heard it. He's like, "Did you really say that?" Yeah, this is from a couple of months ago, but kind of special because a U.S. court filing in March shows that Scotia also provided around 800,000 pages of evidence to regulators probing precious metals trading at JPMorgan. So it seems like Scotiabank is ratting out JPMorgan. Gee, it'll sure be fascinating to see how this all ultimately wraps up. I don't know. My guess is that the market is going to take care of this in one fashion or another. And for people who say, well, the manipulation will never end, keep in mind it was JPMorgan's own London whale back in 2011 that had a position on that got bigger than they could handle. And at least based on everything I've seen, along with Ted Butler's research, special note coming on Ted in a moment, seems as if JPMorgan is not currently short, for whatever that's worth. And whether it's 1 billion ounces or, they still do have that 160 million ounces on their COMEX report. And I'll ask Andrew McGuire when he comes on, I guess, first Tuesday of the month. Maybe that's in 3 weeks, but they pledged that 30 million for delivery, yet it's still sitting there. So we'll see. It'll be fascinating to see how this all unfolds. And but at least whatever is possible, maybe get something organized so that at least let people know what the options are. And I will keep my eyes out for that. But it looks like Scotia ratted at JPMorgan. Just makes me giggle. But now let's take a look at something, because this, again, I know I've played this before, but for anyone who hasn't seen it, we'll just play a short part. You don't have to take my word for this. Here's Bart Chilton, former commissioner of the CFTC, who, amongst other things in that interview I did with him a year ago, mentioned that while he would actually respond and acknowledge that he did see flagrant evidence of wrongdoing, that most of the other commissioners actually started blocking emails from people who wrote in with evidence. Keep in mind, this is a government agency. I believe their budget is $55 million. So certainly if you're thinking, gee, why is it that, especially now when we have these confessions from Bank of Nova Scotia and others, why was the CFTC blocking evidence? What is being done with the people who blocked the evidence that could have prevented this years ago? What changes have been made? How is this being addressed? What guidance is going to be given to investors, given that we see the same thing happening today? And we won't guesstimate it. We'll hear from Bart, then look at the chart, and draw some art. We'll stop there. But take a quick listen to Bart Chilton and Chris Marcus, this fellow.
Again, I appreciate you mentioning the spoofing. Curious, because my understanding of how some of the manipulation has occurred is that, if silver is trading $20.05, there's a lot of stop orders placed around the $20 handle. So often if the price can get pushed a little bit, then you get a lot of those high frequency algorithms kicking in, and then you'll see a drop with many feeling that people kind of nudging a little are then able to buy lower. Does that sound like a reasonably accurate portrayal to put it in perspective to folks, or would you phrase it differently?
Well, it's a good portrayal, but it's a very good portrayal. But it's actually pennies and nanoseconds. So the difference in your description is that today, when a market moves because of a spoof, it can move a lot more.
So there you go. I skipped. If you want to hear the part in between, he talks about some of the details there. But we found out that today, the only difference is that when things move more, or when it happens, the way the markets are set up, things move more. And shockingly enough, on this waterfall decline in the gold market, what do we see again? Yet massive volume. Same thing we've seen time and time again for years. So again, let me explain why I said I would have gotten thrown out of my trading shop. So if we did an option trade, let's say I bought some calls, wanted to do a delta neutral, and I would sell stock. Now, if it's in a really thin stock, and I don't think there was any, directional impact in the option order, we would either leave it unhedged or do what was called a VWAP, which would essentially, rather than blasting out all the shares at once, which would move the price. Because if you want to sell shares, you want to get the highest price possible. So you would not do that when liquidity is thin and just hammer it on the market. But again, you can see that's exactly what happened here. Not once, but twice. And, you just heard it in Bart's words. You heard it in the gold chart's words. Let's get some silver chart up here. And once again, no surprise that you see a spike in volume. Now here's interesting, at least this time you see a spike higher. So by all means, it can be moved either way. Usually it is to the downside, and certainly here again, that was the case. Now, this is just, I'm going to I won't even speculate, but it was interesting again in that exchange with Andrew Maguire, where he emailed the CFTC in 2009, explaining how this all works, telling them how a move would play out in advance. He did mention that often when the number is bullish for the metals, you will actually see the thing go up first before getting hammered down. Not sure if that's exactly what happened there, but again, I don't know. Let me put it like this. If I were part of the CFTC and I wanted to regulate the silver market, at least given that people are often so confused of why these big moves occur, if there's another explanation for what's going on there, not only can't I find it, I've yet to find anyone in the financial world who can explain that. And if any CFTC regulator has an alternate explanation, my guess is if you actually have access to those trading records, I don't think this would be too hard to find out. And at least as an investor, taxpayer, I would think that's something reasonable to expect from the agency, but we will see how that goes. As you can see here, not a fun day for the miners. Dolly Varden hanging in there, up about 3 cents, but as you can see, a lot of red on the board. And in particular, let's take a look. First Majestic down to 1148. Now, the price of silver still close to $27. So on my high-tech spreadsheet, you can see at the end of last year, silver was $18. First Majestic, $12.41. So now with silver about 50% higher, almost $9. First Majestic down on the year. I don't know what else to say. You know, there's that short position. And I guess until I figure something else out, I'm just going to keep buying call options. And my best guess, which of course is not legal trading advice here, is that just how you saw silver eventually explode once it got through the $20 level. I wonder if that will not be the case with how things ultimately play out with the First Majestic trading. We'll be keeping an eye on that for you, though. So hit that subscription button and the notification bell, and you will be informed of that. Quick piece of news here. See Butler research page, and I have that pulled up because Ted had a great article today about the bizarre turnover that's been going on in these warehouses that coincidentally started right in April of 2011, right as the price got just absolutely destroyed from its $49, $50 high. And fortunately, Ted is going to be joining us at Silverfest as well. Just finally confirmed him yesterday. He's going to dig into that exact topic. By the way, we're getting some of these things updated, but Silverfest now listed there. Click here to register. At the time of this recording, we're still getting that button fixed, but and I know the schedule was somewhere on there. We're getting it all queued up, but you'll be able to start signing up very soon. And I'm going to see if I can get that cranking by the time we start tonight, by the time this airs tonight, rather. So anyway, that is our silver stocks Butler research. Quick note before I continue further, tonight's video is sponsored by Miles Franklin, where we actually had quite a run on the silver kangaroos at 439 over spot. I know Andy started with 15,000 of them, and Yara, who mans the Arcadia at milesfranklin.com email address where you can get more information, or if you'd like to place an order. I know she's been selling a handful of those this week, so I believe there are some left. Silver kangaroos 439 over spot, and you can find out more at Arcadia at milesfranklin.com. Although speaking of silver and Ted Butler, this is a fun one. You see the commitment of traders report. Open interest of 198,069 times 5,000 ounces per contract. Then we'll go down here by net position. 4 or less traders are short 24.9%. So that gives us, as Ted often updates in his great column that I would suggest you'll get regularly, 246 million ounces of silver. Put another way, that means that these 4 traders, which I'm assuming are banks, don't really know for sure, that's my guess, but basically from 20 to 28 in the silver price, that means they're sharing about a $2 billion loss. Throw on from 18 to 20, $2.5 billion. Now maybe they're going to get bailed out with the fine money from Bank of Nova Scotia or the Fed's next easing package. I'm not even sure if I'm joking on that one. I mean, it might actually be what happens is the shocking part. But we'll keep making some noise here over at Arcadia and at least see what we can do. Here's the silver open interest. Getting closer to delivery day. A little more than a week away. I'm not sure the exact date. Today is the 19th. I think it might be the 28th. See, it's still pretty big, down to 77,000. That will likely come down in quite a bit more. I mean, it will definitely come down quite a bit more before delivery days, but this one I thought was interesting. You see here, this futures 397,000, almost 400,000 contracts traded on August 11th, which means the equipment, and each one is 5,000 ounces per contract. So that's 2 billion ounces of silver that were traded in one day. Keep in mind, in a normal year, we're mining about 900 million ounces. This year, you've had the COVID shutdown. So, I mean, it's a lot. And we see August 11th. Now, when 2 billion ounces are traded in a day, I wonder if anything unusual happened in the price. I mean, probably not, but we'll just take a look. Oh, and then coincidentally, you see August 11th. That is the red line. Silver goes from $29 all the way down under $24. I wonder if Bart Chilton would have even been impressed by the size of that spoof. I'm sure these volume numbers and that price chart, I'm sure that's just a random coincidence. Not likely connected at all. I can't see any way. But before we wrap up here, so what was the minutes today? Fed officials expect that coronavirus will weigh heavily on the economy. Minutes show. And where do we see? Express concern. Basically, the latest statement, at least indicating that more easing is probably near, which the minutes underscored the need for a fiscal package. Chairman Powell has been adamant that we need to see another package. Again, they're not going to fund that by creating jobs that either political party will promise during these theatrical debates that hopefully you won't watch. I mean, I'm not trying to pick on politicians, or maybe I am, but I mean, I was actually just reading this book about the benefit in people's lives if they've stopped watching the news, given how it's programmed to. I mean, gee, if you have a half hour on any given day and you pick the absolute worst news in the entire world and cram it in there. So similarly, with these debates, they're going to say, we're going to save the budget. Neither side is going to do that. I'll bet you an ounce of silver on that one. Obama, Bush, Clinton, all skyrocketing budgets. And it's confusing because, again, it's like Powell and Trump tell us the market is strong, yet here we're going to need more easing and it's falling apart, yet somehow S&P sets another record. Apple briefly tops 2 trillion. Let's take a look at the Apple chart, see if there's any chance. What is the 10-year? 0.68% with a 2% inflation mandate. And let's see. Let's take a look at Apple's run to 2 trillion. Maybe too far, too fast, even according to the folks who love the company. So we'll leave Apple alone for today. We won't pick on them. But anyway, is the economy weak and we need more printed money, yet the stock market is at all-time highs while half of the country is shut down or maybe starting to open back up. A lot of this doesn't seem to make sense. That's understandable. This is what happens when governments have gone bankrupt and use printed money to try and patch that over. And it works for a while until it stops working. Sure looks like we're getting to the end of that. And we are also getting to the end of today's video. So again, I thank you for being here. As always, once more, tonight's video is sponsored by Miles Franklin with Silver Kangaroos 439 over spot. You can email Arcadia at milesfranklin.com. And to find out more about what is going on the physical gold and silver market, stay tuned because it is coming your way now.